How you doing, Warriors? Let's have a great Thursday. Welcome all our viewers from investing.com. You guys at investing.com that just watch our webinars once a week off that website. Want to make you aware that our prices are increasing. It's a great time to lock in and be grandfathered in. July 2nd, I believe, is the last day. So right before the holidays in the U.S. Good time to do it now over the weekend. Get used to navigating it. There will be some market action, even though we'll be closed for a day next week. I believe that Blake and Steve and Stel put together one of the top teams of talented analysts and tacticians and traders, different methodologies, private chat room, harmonics, Elliott Wave, award winners, even we won an award. Here you go, from FX Street. Okay, hi Dan, how are you? So take this time to do it also for the summer trading season. If you're, not completely satisfied with your broker, there's a way to get on a reimbursement program by getting a hold of our sponsor at Forest Park FX, Trent, Justin. I know they've helped some people. I've gotten some tweets. They're going to do what's best for you, even if it doesn't help them materially, financially. You're going to get good, straight advice. So support our sponsor that sponsors us. And now everybody, they're not able to plot that? Oh, okay. All right, well, we have no plots except to add value to your trading experience that we do here free for everyone every day. God, I have so many ideas this morning, my head's going to explode. Boom, just exploded. Okay, so a lot of people are probably saying this is a double top up here in the Dixie. And it could be, but does anyone know what makes me suspicious of it? Okay, I'll tell you. Same high. Same high. Buy stops not elected. High here is 95.53. High here coincidentally is 95.53. So I'm sure people that start shorting the dollar down here are going, oh man, wow, I didn't get stopped out. And bring in new sellers. And where do you think the stops are? Well, I'm going to teach you. If you were short this market, where would you put your stop? That's right, where everyone else has them. Okay. So, the algos. Yeah, 2 drives on Kiwi. Full moon. Moon river, wider than a mile. I'm crossing you in style someday. Andy Williams. No, I don't think. I don't think it means turn around. Anyway, so I'm a little skeptical. Maybe it works. Something that I'm not skeptical of, but it's been frustrating. Euro pound is jumping off the diving board here. Euro pound. I think it's finally going to get decisive. We've broken out over this 88.40 level that's turned it back. So you've had like 2 months since the bottom of them, trying to take this market down. We're a crack in resistance here. I think eventually we head for here. So, when this is going this way, you would think it would be because of a bull market in euro, but maybe just the euro's going to hold up better on a decline. Although I think a dollar top is imminent, I think this is important. And why it's important is because I've been saying for a long time it's incomplete. So here we are on a 50-week moving average right here. I think shorts will start capitulating here and definitely over 90. And you just do something arithmetic on this range here, call 89, that we could eventually see a new high. I've been saying this pattern looks incomplete to me. So look at this pattern right here and look at what's completing. Talked about this completing right here. Take a picture. Yeah, I'm pretty old, but I'm like an owl. I have the wisdom of an owl and the spirit of an eagle and the heart of a lion. Oh, Dave likes it. Okay, so Dave learned how to do that for free. Okay, so there's another idea. Here's my Wile E. Coyote formation here in NASDAQ. Maybe it was on the daily. Yeah, so Wile E. Coyote right here, Roadrunner's already taken off, and now he's, sitting here on a cliff, ready for a cliff dive. And also, should probably, Steve started nibbling at metals. Steve Volge is a great trader. He's not really a crap shooter. So you are getting a lot of divergences in the precious metals. As you can see, there's kind of wedging out here. It keeps grinding to new lows. Between here and 1240, I think there's a low. Silver should lead it out. I've been talking about 1580 for a while. This is why this daily line almost came off it. So I was looking for a flush under this low. I don't know for how long, and then it looked like it wasn't going to happen, but now it's happening. So, you're taking out stops yesterday in silver that were there from the beginning of May when everyone thought they had a new bull market going. Well, you know what? I think these guys are out. And if we get more pressure in the next few days or weeks, I'd start a scale in at 1580 and maybe risk this low. So the bet is, I think that we put in a higher low than we did at the beginning of the year. So 1580. If that goes, then you're talking about much lower silver prices. Then you're talking 1520. I have a line off these weekly pivots, comes in at 1450. But that could be a shot here. Everyone doing okay? Any questions for me before I? Also, our guest today, with the market possibly getting ready to cave, we have Vance Harwood, who's known for his work with VIX. So stick around for Vance today, Vance and VIX, and we'll see what he's seeing here in the VIX. So thank you for listening. I don't have one. I just want to bring up something that, I'm really not as sure on the dollar as I am on other instruments. Okay, that's why I talked about EG, but I showed the SEC. I can't follow as many different markets and be precise. If I start looking at too many things, I lose my focus. And I use the example of a trader I know who never left the cattle pit on the floor of the CME. He didn't have to be diversified to be a very successful trader. In fact, that's pretty good advice for some people. Get to know a couple of pairs real well instead of a lot of pairs and you don't have the clarity. So, I've heard that if you can't remember the last price of what you trade, you're trading too many things. What's the last price in the shekel zlotny? Anyone know? Okay, guys, you're trading too many instruments. Good morning, Blake Morrow. Welcome to investing.com Thursday.
Good morning, Dale. How's it going?
Good, buddy. How are you?
Oh man, I'm just watching it. You know, the dollar's got some strength. I mean, we're maybe not against the yen, but man, the cable sure is weak. The cable broke a pretty key support. The Kiwi and the Aussie are challenging some support levels. We got precious metals. They're extremely heavy, and things could. I know you were just talking about the dollar, and frankly, here, let me go ahead and take things over here.
Yeah. Well, I didn't trust this double top was a major theme. If we had taken out it's the exact same high at 53 on the Dixie. So now people thought they were going to be stopped out if they did it earlier, and now they're going, wow, they didn't take me out. So now other people that want to sell the dollar are using the same stop at 54.
Yeah.
And they're going to take them out.
Well, the dollar is sitting right up against these highs here at this 95.50, and we did knock our head up against there overnight. We pulled back a little bit. I don't know if we're going to break out, but you look at the cable, and the cable is just getting demolished right now. I mean, I was really looking for a potential reversal above this downsloping trend line. I was thinking, okay, I was thinking this week, if you listen to the week ahead video, I was waiting for the decline in the pound, and I was going to look to buy it, which I did yesterday. I actually bought the pound, lost money. I picked it up.
Yeah, you thought we'd get a higher low instead of getting up.
Exactly. I thought we would, and I didn't stick around long because I'm like, okay, well, I picked up both the euro and the pound, and which was a shame, because what happened is I made money in the U.S. dollar Mexican peso long, which we had a pattern in play, played out of this descending wedge. I had made really good money getting long the U.S. dollar Mexican peso. It was like, if I would have just stopped there, I would have had a great day, but I didn't. I picked up the cable down here. I want to say it was at the 618 or the 786 retracement. I can't remember, but I picked up the pound. I picked up the euro as well. Not too far from where we're at right now in the euro. I picked up the euro, and I ended up getting out of the euro and pound. The euro, lost like 20 pips, and the pound I lost like 30 pips, and I gave up a lot of my gains from the peso that I made overnight, which was very frustrating. And I mean, I had a positive day, but I'm talking very marginal positive day. I basically pissed away my profits, which is a shame. But I had a plan. My plan was to buy the pound, thinking that we were going to come back and take out this trend line. But the pound is just, I mean, it is disgustingly bearish right now, and that's a little concerning, because when the pound is bearish, it can make the whole dollar complex move in one direction, the whole dollar index. So but I'm looking at the cable. The 127% extension comes in at 130, basically 130.40 here, 130.35 or somewhere around there. 130.43 actually is where the 127% extension comes in. That's entirely possible. The euro's holding 115 for now. But and as you pointed out, the euro pound looks extremely bullish. I mean, I was looking at the euro pound today, and we finally broke that 618. That fib level has capped us since April or May, excuse me. And we finally broke above it. It looks like we're going up. Yeah. Well, no. This is just this a couple months ago. This is a 4-hour chart. So. Right. It looks like we're going back to channel highs, which would be 89 pence. And then if the euro pound.
And then if we break out there, Blake, it measures like to new highs. If you pull up the daily or weekly, it's good challenge highs.
Yeah, we could. Yeah, we could very easily be right back at 92. And looking at the cable and the way it's acting right now, that wouldn't really surprise me a whole lot. you know, just the cable's looking pretty weak. There's been a lot of people bullish the pound as of late, and you know, I have said I wouldn't be surprised if we get down to the mid-20s, 120s, you know, like 125, 127. I wouldn't be surprised. I didn't think it was going to happen, but, you know, it's not surprising because we are also dealing with, you know, Brexit still, and you know, it doesn't look like the European Union has Brexit negotiations on the docket, so that's going to, you know, they're the EU's probably going to have some pretty gnarly comments about, you know, how the UK is not living up to their end of the bargain. You know, anyway, it's not easy, the negotiation process, which is just weighing on the cable all the way around. Now, a couple pairs that I think we should be watching today is the Aussie, which we have 127% extension in the Aussie dollar. Comes in right here, where basically where the lows were yesterday. That comes in at 73 1/4. We're at 73.40 right now. It doesn't mean we're going to stop there, but we do have a pretty divergent relative strength. You can see it here. So just keep that in mind when you're dealing with the Aussie. The Kiwi also, we are at a multi-year trend line. Now, depending on how you draw this trend line, you know, and I don't profess to be perfect, but we are at pretty critical support. I mean, we have, you know, spike lows down here, spike lows down here. That all comes in around 76 cents. I'm sorry, 68 cents, and we're at 67.58. Now, you could argue, oh, Blake, we're broken. You know, there's a lot of time left in today. I wouldn't necessarily count your chickens before they're hatched. Not at this point in time. You know, we're bearish at the moment, but we do have U.S. GDP numbers. It doesn't look good. It doesn't look like the Kiwi's going to turn the corner here. As I was telling all the guys and gals in the ForexAnalytix chat room, in order for this thing to turn around, we do have to, you know, take out 67.80 on the downs, on the upside, meaning we have to you know, turn higher from here. And there's a lot of work to be done. And in a day like today during the World Cup, it's you know, there's we don't have to make a move higher, and it's going to be really hard. If you've watched volatility at all as of late, the market is just not moving. So we do have U.S. GDP that's coming out in a few minutes, which could, wow, look at the pound, right back down again. A pound, I mean, this thing is just trading really heavy here. And also, you look at silver. Silver's breaking lower. It's not gold's not falling. It's just silver's bearish. Here's silver. Look at that. We're breaking lower here in silver. We're coming towards that channel support that we spiked down to yesterday, but silver doesn't look very good. Gold's not really doing a whole lot as of right now. It's just grinding lower. But you know, again, we're at pretty critical levels here. Oh, and so I was talking about the Kiwi. And let me go back to the Kiwi. So we're at really important support. We'd have to see a full-on reversal today to really convince anybody that we're going to turn. I was actually reading a note from Citigroup, and the trader there at Citi was, you know, stating, you know, might cut my New Zealand dollar shorts depending on price action if we don't close below 67.70, 67.80. And so everybody's looking at the same price. It's not just myself had brought it up. I read the notes from this morning, and the Citigroup traders looking at the exact same price, and I tweeted it last night. So it's not, I'm not doing any magic here. I'm just pointing out the obvious. We're at really key levels of support on the Kiwi dollar. The Canadian, this thing has been frustrating as all get out. There's been a lot of interpretation of the Bank of Canada's POLA's comments last night, and I was, or yesterday, and I was listening to some of his comments, and for me, it was really difficult to make heads or tails, and I can say the market obviously has a very difficult time making heads or tails of it as well. We spiked up right to resistance at 133.85. We came right back down, and we slumped below 133. We're back at 133, and if you look at Canadian bonds, they suggest that the Canadian currency should strengthen a little bit, and the dollar Canadian should come down. But this thing's been really sticky, price action wise. It hasn't wanted to come down.
Blake, so, can I just add one thing? Sorry to interrupt you.
Please do.
Regarding Pelosi's comments, I had exactly the same thoughts as you, but there was one comment which really stuck to me, where he said that, I can't remember the exact wording, but he basically said that even if there is one or two data items which do not come to expectations or are worse than expectations, it doesn't mean that we're going to stray off our course or something like that. And I found that to be a little bit more hawkish than expected. So I think that's why maybe the Canadian dollar is finding some strength. So USD CAD is not spiking higher.
Right. Yeah. But then, and thank you, Stelios. And then one thing that's tearing it in opposite directions is look at the U.S. equities right now. Look at what the S&P just did just moments ago. I mean, the S&P just sliced through some support, and that was support from yesterday, or the last couple of days, actually Monday and yesterday. It was just sliced through support. So then that tends to support the dollar against commodity currencies, emerging market currencies like the peso, and the Canadian and the Aussie and the Kiwi. So this weakness in equities is bringing in some Canadian currency weakness. So you've got it being torn in a couple of different directions regarding the Bank of Canada. You got certain comments, and then you have price action, which is not conducive to a rally or to a sell-off in the dollar Canadian either. So it's a difficult market. There's a lot of times in the market, and Stelios, I'm sure you could agree with this. You can take a step back and say, well, I am bullish the euro because of X, Y, and Z, or I'm bearish the pound because of X, Y, and Z. This market is extremely challenging because there are a lot of cross currents. And on top of it, we are in summer months of trading. And on top of that, it's the World Cup that happens once every 4 years. That happens to be right in the middle of our trading session. So it's leaving a pretty challenging environment to navigate around. And so for all those people out there that say, oh, it's so easy. Well, it isn't always so easy. There are definitely challenging times, and this is going to be one of them. And that's why you have to be very careful with what you're doing.
Blake, it's actually spot on, because if you look at the global currencies, almost every country has some kind of uncertainty problem. You got Brexit, you got Italy and Spain, you have NAFTA, you have China and US. You have all these things happening. So it's very difficult to have like a very clear view on a particular currency or a particular country. So I agree with you 100% on what you said. Plus, it's the summer, like you said, plus the World Cup, plus everything. So
yeah,
it's very difficult.
It is. It's very challenging. So it's important to be a little bit more cautious in what you're doing in the markets at this stage in the game. Here in 6 minutes we'll have U.S. GDP. Hopefully, we get an outsized print, whether it's a better number or a weaker number, to help give us some direction today, because right now the dollar is, we obviously sold off from the highs, but we're a little bit mixed right now. And look, I don't think we're going to get a weak number. As much as I'd love to see a weak U.S. dollar number, so that we could see a significant bounce in the euro, or a significant pullback in the dollar yen, or a significant bounce somewhere. The U.S. data has been pretty good. Wouldn't you agree, Stelios? I mean, the U.S. data as of late has been good, and so when you're feeding it into a number like GDP, which is all factored into the rears anyway, it's we're probably going to get a good piece of data today.
Theoretically, yes. I mean, I've said this before that the US data was really, really good, like a couple of years ago, leading into the beginning of the hiking cycle. So it was really strong then. Now, slowly, we're starting to see some prints which are missing. It's not this continuous barrage of really good prints. So I think I agree with you. The data in the US is still doing okay, so the numbers should be pretty good. But I think momentum is slowing.
Yeah, slowly. Yeah, but but will it be factored into GDP? Probably not. At least not this quarter's read. Hey, thanks for chiming in, Stelios. I'm gonna welcome Steve. I'm sure Steve is here, but before I do that, I wanted to state that our new pricing is in play, right? Steve, we are allowing you guys to lock in prices until this Sunday. Before we raise our prices across the board on ForexAnalytix. So if you guys are not ForexAnalytix subscribers, this is the week that you want to get involved. Is that correct?
Yes, they have a few days left until the 2nd of July to capture the old Tier 3 price, which is going to be lower even than the Tier 1 price once we switch to our new plans. So for the following days until Tuesday, until Monday, actually including Monday, they have one last opportunity. There is no trial, there's no Tier 1, no Tier 2, but still they can capture and lock in the Tier 3 price at a lower price than they will be able to get even Tier 1. So it's a great opportunity, and it's an opportunity that goes away in a few days.
Great, and good morning, Steve, and
good morning, Blake.
And also I want to mention really quick, if you guys haven't been visited Forest Park FX, make sure you check them out. Here's the link. I'll put it in the chat box. They are our partner and our sponsor of this webinar. At the very bottom of this page, you can get a hold of them via Skype or email. Or call the number directly. It's all, all their contact information is at the very bottom. If you want to get ForexAnalytix, try to get it for free through your trading. You can do that if you're outside of the U.S. And even if you're in the United States, you're in the United States and you're not happy with your broker, make sure you get a hold of them so they can give you their suggestions on who might be able to best fit your needs. And that's what they're kind of like a specialty shop. They do one-on-one, with you and just figure out exactly what you're trying to do and how they can find a broker that will best suit your needs. And that's kind of how the FX market operates nowadays. In my opinion, that's the best way is find a broker that, we're all different. Find one that basically fits your needs. But I'm going to turn it over to you, Steve, and Stelios, and
let me say, Blake, that from what I've seen and from my experience, first of all, we have a decent number of people that have already been involved with them, and they already have a discounted or even a free subscription to ForexAnalytix. And we yet, in so many months that we were working with them, we haven't had a single complaint. Everybody I see in the chat room as well, everybody that has actually worked with Forest Park FX, they're really happy. I mean, a lot of people have changed brokers, and they're at a much better situation now. And I see that they're doing a wonderful job.
Absolutely. All right, guys. Hey, good luck today. Thanks, everybody, and happy trading.
Thank you, Blake.
Thanks,
happy trails.
Same to you, mate. Okay, I'm switching over to the USD yen. We obviously have very, very, very important data coming up. So, Coach, any last guesses before we get the print? Actually,
Well, in GDP?
Yeah.
We expect no idea.
2.2 quarter on quarter. Okay, USD yen is here.
2%. 2%.
Ooh, that's on the weak side, actually. And a lot of speculation that it would have been strong. So 2%. annualized the quarter on quarter for the first quarter. So let's see if we're actually going to get some kind of a response. So far, from what I see, the USD yen, which theoretically speaking is the most sensitive, has barely moved. Like it has moved like 2 or 3 pips. So the market is completely unfazed so far with this print. Initial jobless claims, as expected, more or less, it's 227 versus 220, but as a percentage, that's like negligible. Outside. Let me see, what else do we get expected? Previous 218. So yeah, initial jobless claims also more or less in par with what we had last month as well. So nothing to see here. So it's just a GDP quite weaker than expected. Consumer spending rose 0.9 versus estimated 1.0, and that's probably what made a difference. Spending on services grew 1.5%. Previous estimate was 1.2, while inventories net exports subtracted from GDP, previous reported as making small contributions. Investment in intellectual property jump at an upwardly revised 13.2 pace, most since third quarter of '99. Corporate pre-tax profits 6.8% year on year and 1.8% quarter on quarter. Okay, so the market is really not doing anything. So we're going to give it a few more seconds. Now I see the Euro USD strengthening somewhat, but still, I mean, we're talking about negligible small moves. What is moving though is the S&P, and this is quite an important area to watch. You can see here I've marked this area. We were talking about it even a couple of days ago that 2,735 to 40 was the first area of support, but quite an important area of support. The more important area of support was this one, the 2,690. So in my opinion, we are currently testing the important level, because if we actually crack through this, then in essence, we interrupt the series of higher lows that we've been seeing since we found a low in February. Because if you look at this, let me mark it. So we had this low here, right? The double bottom. Then we had a higher low here, a higher low there, a higher low there. And, if this area holds, that's going to be another higher low, right? But if we actually penetrate through this area, then we interrupt this series of higher lows, and that increases the probability that perhaps, the second scenario, which is one more leg lower, is in play. That's why I consider this 2,690 area quite an important area to, to monitor. So I think today is going to be quite an interesting day, especially from a risk perspective. And it's not only the risk. If we go to bonds, I was also showing this yesterday in the chat room. As you see, this is the 10-year note, right? The ticker is ZN, actually. So we were talking about this probability since several days ago. We were actually up here that we might come down, we might retest this broken wedge, and we might push for one more high from there. And so far, this has been playing out very nicely. We sliced through the 119 and 120 area of resistance. And now actually the next area of resistance is at 121.25 roughly. And then we can be looking for the 38.2, which is at 122. So, so far so good. Obviously, bonds being bid goes well with seeing some risk of, or anyhow, a general risk of environment. And if we want to take it one step further, if you remember, these are the yields. They're obviously inversely correlated with bond prices. These are the yields. We were talking about the possibility of this big inverted head and shoulders formation. We broke out, we came down, we retested it, we moved higher. Then we came down, we retested this. And when we were up here, I said that, listen, if ZN actually plays ball in the way we're looking at it to do so, that means that we should see one more leg lower in yields as well. Perhaps even a fake breakdown from this inverted head and shoulders neckline. So far, yields are playing ball. I know that somebody can even, it's not really pretty, it's quite ugly, but somebody can even consider the probability of a head and shoulders formation here, right? It's clear, shoulder, head, and perhaps we can form a shoulder there. That's going to be, quite a bearish indication from yields. So, but let's not jump the gun. We still have this trend line to test, and as I said, we might even see a move down towards the 200 DMA, which is at 2.67%. That's the yield, right? The 10-year yield before actually moving higher. Now, let's have a look at the bonds, at the bonds, which are obviously the German bonds. So far, we've seen this recovery. We were expecting a recovery from either the 61.8 or the 78.6. But as long as this descending trend line, let me zoom out so you can see it. As long as this descending trend line is holding, I think we shouldn't jump the gun, because we're in a larger consolidation. You can see how clearly this move is consolidated, right? So only if we actually break above this 164.40 area, I think we can be talking about a major breakout. Until then, you need to respect the possibility that more choppy price action is on the table, right? So personally, I wouldn't be that much involved. I think that the treasuries are present a much cleaner technical setup, and this is probably the one we should be paying attention to. I know that Blake mentioned the cable, but I have a specific drawing here on the cable, and that's been here since March, April 2017. I was viewing this as an ascending channel, and as you see, the ascending channels, both resistance and support, kept playing a technical role even after we broke out. This resistance acted as support. Now this support acted once again as support once we broke below it. But now we're breaking below this, and also we're breaking below the 50% fib, right? So the next area of support is at 130, and below that is actually the 61.8 at 128.50. Obviously, cable so far has completely failed to produce any decent bounce. I have to be very, very honest. I'm looking forward to buying the cable. I made an attempt here. I bought only a quarter of a position, and I bailed out immediately. But I'm looking forward to buying it at some point, because I do believe that sooner rather than later, especially the cable, has to mount some kind of a rally. I mean, I see a move that is very, very mature to the downside. I would want to see a big rebound towards the 136 area. So I'm looking for an opportunity to trade it counter trend. And then, when I see a decent enough bounce, I would then be looking to sell it. Until then, I don't think this is a place we should be selling. I think the reward to risk ratio is actually not that good. Now, on the other hand, we have Euro USD. Euro USD is actually, this was the third attempt to break below 115. It found once again support. I mean, on a daily closing basis, we haven't managed to close below 115.35, and we're still holding here. But in all honesty, this looks to me like a formation that's more or less bound to break to the downside. So I wouldn't be actually betting that we're going to hold this level. We're going to form some kind of a triple bottom. I don't think that the probability is high. I would want to see the 114.50 area get tested, perhaps even the 113 area. Regardless, for us to even be talking about a larger rebound, we would definitely need to see 117.10 break to the upside before we can consider any kind of bullish interpretations for the Euro USD. Now, Aussie, once again on critical level. Actually, the previous time it didn't make it. My initial target after we broke below the bear flag was the 127% extension. I had written that in my analysis, several days ago, actually a couple of weeks ago, that once we break below this bear flag, we should tag the 73.25 area. We actually did that yesterday. So this target has been fulfilled. This expectation. Now the question is, what happens from here? If we actually do break below this, because it's also a horizontal area of support, the next area of support is actually below the 72 cent area, right? So be very careful. We might see some kind of rebound from here. There is a possibility. I mean, this is a support area, but if this area fails, I think that there is at least another 150 pips to the downside. And finally, Kiwi is catching up, right? Because Kiwi was a lot more reluctant to follow through with the Aussie, and it finally, with delay, broke below its equivalent formation. This was not a bear flag, of course. As you see, this was a pennant. And after finally failing below this 68.50 area once again, we're now finally seeing some acceleration. As you see, the RSI is also breaking lower. So I will believe this kind of a break. If I zoom out, you can see that we're now trading in a territory that we haven't even visited since a little bit more than 2 years ago. Actually, it was May of 2016. So you should respect this kind of a break. This is exactly what I was expecting. Those of you that were here, we had drawn this on the webinar that day, that perhaps we saw this candlestick formation. We said, okay, perhaps the Kiwi wants to rebound a little bit. Perhaps it wants to make it back to retest this broken wedges support as the resistance. It didn't even make it there, actually, and then move lower. Now, even if this produces some equality target, we can definitely extrapolate where we would be looking for the target to be. So if we extend that, as you see, the target is at 65 cents, all the way down there, right? More or less coincides with the 141.4% extension of the last move higher. So the 141.4% extension of this move higher is also at the same area as an equality target of the first leg lower with extending the second leg lower. So Kiwi looks like it can produce quite a lot more downside, and especially if risk keeps moving lower and finally USD yen decides to roll over. I've said many times that Aussie yen and Kiwi yen don't look good as well, and you can see that Aussie yen
Yen's rolling over now, Steve.
Yeah, which makes sense, to be honest, Dale, because how long can they keep it? How long can they keep it elevated with risk tanking almost globally, right? So Aussie yen stalled a little bit here, came back, retested this broken channel as resistance, and in my opinion, if it breaks below 80.5 cents, it should accelerate to the downside. Kiwi yen has obviously behaved somewhat better during the past few days, and as you see, Kiwi yen is currently trading at lows that we haven't seen since November, since actually the spike that we had at the elections that Trump got elected in November 2016, right? So Kiwi yen obviously making a big move to the downside. As you see, even the RSI is breaking here the equivalent trendline support. So Kiwi yen definitely doesn't look healthy. The reason we've seen, and I mentioned that a couple of days ago, the reason we're now seeing Kiwi underperform the Aussie is that we got a big move higher from the 61.8 in the Aussie Kiwi. And to be honest, as it seems, we've now broken above this. So now this looks like a corrective move, like ABC, which means that perhaps we should be looking higher here, which means that now that this move is complete, and now that we have the structure, and now that the structure seems, every way you look at it, corrective. Why does it look corrective? It was a three-wave move, right? We had an RSI trend line breaking conclusively to the upside. We have this important 1084, 1085 support resistance zone breaking to the upside once again. It was more or less channeled. So, if you want to be on the right side of the market, you should, from this point on, respect the possibility that Kiwi might remain for some time weaker than the Aussie. Okay, that's why, and that's actually more or less the only reason I'm looking at Aussie Kiwi, because I find it very tedious to trade. But it's a good indication of which pair you should select, when it comes to trading the Aussie or the Kiwi. You said that the USD yen is rolling over. It is, but so far that's not a big move. To be honest, what I'm paying attention to, and let me go down to a 4-hour chart. So this is USD yen 4-hour, right? There is a bullish scenario here, and what is the bullish scenario? Is that this whole move has been just a triangle, right? So I would be paying very close attention. I reiterate, this is a 4-hour chart. I will be paying, and I'm actually paying very close attention to this formation, because I think that, when we see a breakout from this formation, we're going to know in which direction the USD yen wants to extend. So far, from a technical perspective, I have to say that, it's displaying amazing resilience, and I have to respect that. I'm definitely, although I was initially bearish, I'm definitely not ruling out the possibility of a resumption to the upside. It looks decently high so far, and from what we've seen. And I started saying that several days ago that I was looking lower, but this kind of a behavior has started troubling me because it doesn't look like a bearish behavior. And I have to repeat this once again. So I would be very cautious here. If we do break lower from that triangle, though, I do think that we should see all those yen pairs obviously accelerate to the downside. Let's have a look at the pound yen. I had said since many, many days ago that two were my favorite yen pairs to short. One of them was the pound yen. Why? Because it has broken below a long-term formation. It actually came up, retested the broken triangles, support as resistance, and it's now attempting to actually break lower from the previous low, in which case I would expect a lot more weakness. And the other one, the other favorite yen pair I had having to do with weakness was the CAD yen, which so far hasn't accelerated as much as I would have expected, but it has also broken below a long-term formation. Here it is. I see an impulsive move here, a corrective move higher, and I would want to see another acceleration from here. We said that since we were here at the highs, we've seen so far obviously a nice move to the downside. I would expect more weakness, but for that to happen, obviously USD yen has to start playing some ball. Okay, let's now go to the metals. By the way, Dale, do we have an interview today? Let me open the question box as well so I can see what you guys and girls are asking for. Okay, gold. Currently at support, right? Why? Because it's this descending channel I've been watching. I bought yesterday a quarter of a position, so I just nimbled in. I did the same with silver because I don't want to take a big risk. I know that this is a counter trend position. There is no question about it, but I'm willing to lose some, if needed. That's why I initiated a very small position. I want to see, what troubles me with gold is the following. Real yields have been moving lower, which is usually, in the vast majority of the cases, something that helps gold move higher. And we've actually seen gold do the opposite, which is extremely, extremely awkward behavior. And I don't expect that it can keep going on forever, right? We're also on technical support here, so I'm giving it a shot. We're also very oversold, so I'm giving it a shot to the upside. And same deal with silver. I have to tell you that obviously silver closed yesterday below this long-term trend line, which is a very bearish signal. But I want to give it one more day to see what's happening here, because if we see an immediate rebound back in, okay, fine. But if we do see it break, especially below the $16 range, I think that we're headed to $15.70 afterwards, and below there it's just a pocket of air. So that's going to be extremely bearish. Obviously, I'm not going to hold my 1/4 of position that I established yesterday. Just like 10 cents higher from here. I'm just want to see if we get an immediate rebound, fine. If not, fine as well. I'm going to just bail out. But definitely silver is about to do a very bearish weekly close if this price action persists for one more day. And I have to see and call what I call. And platinum as well, you can see already broken below one of the trend lines, this one, and this is now testing once again this descending wedges trend line. So it's also barely holding here. Palladium striving to hold above this ascending trend line. If we do see a break lower, that's definitely going to be a bearish development. And so far, this consolidation looks like it wants to get resolved to the downside. I have to admit that I don't have a position here, but it is what it is. And copper is very, very, very close to critical support now. We're just, critical support, it's at around 294. Okay, we are just above that. So, definitely bulls don't want to see this level breakdown, because I do think that if that happens, we should move at least 20 cents lower, at least, at the very, very least. Okay, so from 294, we should see 274 print rather fast, because there is no real area of support anywhere in between these two levels. Yeah, Ronit, you're right. I think majority of the times gold, silver turns when USD yen falls. Stock market is in the Trump dump, S&P, etc., says Ed. Niraj, you want me to have a look at Indian stock? Okay, can you give me specific tickers? And I'm going to have a look at them for you. Euro yen, there's a question about Euro yen. Let's have a look at it. Euro yen, nothing has changed. As I told you, I'm a little bit conservative here with Euro yen. I was short. I made some very good profit, but the fact that we're still holding within a descending channel, the fact that we had a quality of the legs lower, and as you see, we're consolidating. Like this thing is coiling. Even look at the RSI. The RSI is actually oscillating at around 50, which is a neutral level. I don't want to be involved with the euro yen. I think there are better opportunities if I want to be short, right? And I don't want to be long yet. That's the only sure thing. So euro yen, in all actuality, I don't have any proposal. I wouldn't be doing anything with it where it is. I mean, there is no reward to risk ratio that makes sense. Nifty, I would gladly have a look at the Nifty. Before we do that, let's have a fast look at what the DAX is doing. Whoop, wrong chart. Here it is. What the DAX is doing, there it is. DAX once again pushing for this confluence of supports. Be very, very careful. This 12,100 area, very, very critical support zone. Bulls really don't want to see that break. FTSE, so far the price action in FTSE looks corrective. So definitely, if I wanted to sell an index, that would not be the FTSE. I think there are more indexes that you can select from if you want to trade them to the lower side. Nikkei, nothing much to do here as long as it remains trapped between the 22,000 support and the 23,000 resistance. There is really nothing to do here, and I propose that you just stay on the sides until we see something happening. Nasdaq moving nicely towards this wedges support after breaking the smaller wedge here. Obviously, in the short term, it remains bearish because this ascending wedge breaking down was a bearish event, but be careful around these levels. We might find support due to this trend line. If this trend line fails to work, then I do think that we should be seeing a move down to 6,650 at least. Okay, so there's going to be at least an extension from there to that area. Now let's have a look at the Nifty as you asked. Okay, Nifty moving lower from the triangle once again. As I've said, be very careful with the Nifty. There is the possibility that there is one more leg to the downside. In essence, one leg higher, one more leg towards here. But as long as this triangle is holding, respect also the possibility for a break higher. So watch these. I can't tell you to watch this lower trend line because this lower trend line, as you see, was arbitrary, right? I mean, it only passes from a single point. The reason it was arbitrary is because I was explaining that, the possibility of a triangle is always there, but, you can never know if this is a triangle unless you get a second point of support. So I can tell you to watch this triangle, but I can definitely tell you to watch this low here. If we do break below this low, and if you notice, this low is also confluencing at the moment with the 200 simple daily moving average, right? So 10,440, if we do break below it, I think that invalidates the bullish scenario, and then we might see an extension quite lower towards the 9,700 area. So as long as we remain above 10,440, there is always a bullish interpretation. If we break below there, bullish interpretation becomes quite a far-fetched scenario, and you can start looking lower from there. USD NOK, USD SEK, good questions actually. Quite interesting pairs lately to monitor. Let's go ahead. USD NOK, there it is. USD NOK trying to push resistance once again. As we've said, it remains bullish until proven otherwise. How it can prove that it's something different if it actually ends up forming a head and shoulders formation. But in order for that to happen, we have to see a move towards the 8 level happening, and happening quite fast. Unless that happens, respect the possibility for an upside, in which case I would be looking for resistance in this trend line resistance. You can see that there is a longer term formation. Here it is. So, that passes close to 840, right? You can see it here. Nice confluence of resistances near 840, previous high as well. So why not? We can extend to at least 840, and, we see what happens from there, because definitely if we do see a break above 840, that's going to be a very bullish development on the very long term scale. So that's something that you should not dismiss. One thing I want to add here, crude broke to new highs yesterday. It's testing them once again, and despite crude being extremely strong, NOK is being very weak. USD NOK is, near the recent highs here, right? So what's going to happen if crude rolls over? We're definitely going to see USD NOK push to the upside. So I see this pair being quite nicely bid. I mean, I think that the chances of this extending to the upside are a lot higher than rolling over to the downside from what we're seeing so far. I'm also monitoring this descending trend line in the RSI for extra confirmation. USD SEK, same deal. We were saying the other day that the only bearish scenario was if it formed a head and shoulders formation, which was a far-fetched scenario, and we would have to come down to 858 to confirm something like that. Otherwise, I said that we should see a move towards the 910 area, and that's exactly what's happening at the moment, right? So pay attention to this. Obviously, it's quite stretched. We are also seeing some RSI divergence, so I wouldn't be buying up here. There is no question. I wouldn't be buying up here. So I'm not proposing that you should be buying. It can be a 3-drive. Yeah, I mean,
that's what I was forecasting. So yeah, there is more than one bearish formation than head and shoulders on this. This could be one as well.
Yeah, but we first need to see.
That's my humble opinion.
Yeah, but we need to first see some kind of a reversal from here, like a big candlestick reversal to begin with something to give us a signal that, okay, things are changing here. So far, we
it has some short distribution to go through, because the 1 hour, I believe, confirmed, but I think that, it could be in the process of developing.
Yeah, absolutely. So we can, and that's why I also said.
And I don't know why. Why? I mean, it's not affected by oil prices at all. Sweden, is it?
No.
So it's all just going to be about interest rate policy, right?
And if you think about it, Dale, it's not by accident that USD SEK has been registering a new high while USD NOK hasn't. It's because the NOK is affected from oil, and oil is very strong, right? So this is perhaps what creates this divergence that we see between the USD NOK and the USD SEK. the oil factor.
The oil
right?
factor. Okay.
Yes.
Yeah.
Yes, exactly.
Point.
By the way, do we have an interview today?
Yeah, a great one, Steve. With your description today with the DAX and a lot of the indexes being on the precipice of maybe accelerating or at critical support levels.
Yeah, DAX
Vance
is definitely
Harwood
at a
is with
critical.
us.
Yeah, DAX
He
is definitely
specializes in VIX.
Yeah.
VIX is his thing. So
okay,
Vance is here with us.
Let me show this then that he can comment. If you remember, Dale, we were here together. I was showing this divergence in the VIX, and if you remember, we were together when I drew the possibility of a spike higher from here because there was an obvious divergence. We had this descending channel. We came down. We broke out. We came down. We retested it. We were diverging the RSI, and now we're registering a higher high from the previous peak here. So it would be nice to see from his perspective how he thinks. Does he think that this is going to be another like spike, short-lived spike higher, or is he looking for something more than that?
Okay.
Okay. Enjoy the interview.
Thank you, Steve. Okay, Vance, I see you in here. I want to thank you in advance for taking the time to be with us. I think the timing's perfect with what the NASDAQ and everything else is doing. And I'm making you the presenter. Looking forward to hearing your voice and seeing your screen. Welcome to FaZe, Vance. Make sure your mic is unmuted. Yep, you're unmuted. You're ready to go. You'll see a drop-down menu on top to show your screen and make sure your mic is on.
He's unmuted from our side,
Yes.
but he needs to make sure there is a tab called audio in the platform. He needs to make sure that he has selected the proper input source, because perhaps there is another input source.
Yeah. He's a sharp guy. He'll figure it out. Right, Vance?
I see that he muted himself a while ago and he unmuted it. So the problem is not that you're muted, you're not.
Right.
Just make sure you've selected the proper audio source.
Thank you, Steve. Both Vance's first name and VIX start with V. So I'm going to suggest he renames himself to Vance VIX. Can you hear me, Vance VIX? I hear you typing.
No, that was me.
Oh.
Can you hear me now?
Yes, we can hear
Hi,
you.
Vance. How are you?
Oh, good. Sorry for the delay there.
That's okay. You could also share your screen. Do you see that?
Okay, I'm looking for that. Is that on the same?
Yeah. There'd be a drop-down menu to share the screen.
Okay. Take me a minute. It seems like every one of these tools is different.
Yeah.
All right, I see a tab here.
Let me help you out. Oh, yeah.
Are you?
We've got it. Yeah, we've got it.
Okay.
It's your, you have a page up, how does a SIBO VIX index work?
All right,
So,
good.
So first of all, thank you for being with us today, Vance. Very nice to meet you.
Yeah, great to be on your program.
And I know you specialize in volatility. How did your trading career begin? How did it start?
So I started with stocks in the late 70s as I was interested in stock market and read a couple books. So that's when I started trading. I moved into options trading fairly soon after that, once I had done some work just with various stocks. Became interested in the VIX in about 2005, and
Okay.
What I was looking for was a diversification strategy. And I think anybody that really watches the general equity market has seen that, diversification works great until you really need it. And then when the market, goes into a bear market or a heavy correction, then a lot of the assets become correlated, and it really drops more than you would really hope that a diversification strategy would do.
Yeah, I think that realization took place twice, and that's why people wanted to learn how to become self-directed and make their own decisions, because they tried conventional things like a portion in equities, portion in bonds, portion in gold, portion in cash, and it didn't work. So they, fool me once, shame on you, fool me twice, shame on me. I think that was really behind the big macro move of people wanting to learn the markets and learn how to trade. Do you think that was it?
I think that was a huge motivation.
Yeah.
Seeing that the classic let your broker solve the problem sort of things did not work.
You mean let your salesman who sold, the salesman who cold called you to open an account with him to be in their products, not to trust them that much.
Yeah, the person that makes money either way. That's the one you're working with.
Inherent conflict of interest. So, all right. So you start studying the VIX. I'm trying to think back to 05. Probably had a couple of years of the VIX not doing a lot until we got into the financial crisis. So,
it was actually felt pretty similar to late 2016 and 2017, where everybody was complaining about how low the VIX was, and is the VIX broken? Although there clearly wasn't near as much interest at that point, but it was a low volatility period.
Yeah, is it broken? Yeah, I heard that about gold in 2000. It's an archaic relic. It's only good for like being a paperweight, and that's when gold was 200. So the VIX wasn't broken, but some of the products were broken by the panic that we had in February. Tell us a little bit about how you managed risk or exploited that situation. It was an accident waiting to happen. People shorting, option writers, and people just shorting the VIX, cleaning up because in a way some of these ECNs are like options. They have a lot of decay in them, right?
Yes, exactly.
So do you think they're worse than options or similar, the decay levels and things like, I've seen about 10 reverse splits and some of these things?
Well, there's really two pieces to that. One is the long side of that. If you're long VXX or UBXY or TVIX, those are all single or double leveraged long volatility. And those are very much like options. The 2x leverage will decay about 80% a year, just to give you kind of a feel for that. A lot of misunderstanding there, because people will look at stock charts and say, well, it's been way up there before and it's way down, so maybe it's due for a rebound. But what they don't understand is that these products are being eroded away and will never get back to where they were.
Right.
So it's a matter of timing. If your timing is very good and you get into these long vehicles at the right time, you can do really well. You can do 20-30% in a day, but if you hold it for a month or two, you're almost guaranteed to have lost money.
Okay, that's an excellent thing for people to know, because I've done it. So that's something important for people to know. So then how do people go about structuring a trade if they want to be long vol with less decay and have it almost be an asset class for them, Lance?
Well, that's a difficult problem. The people that are most successful at this, they what they tend to do is they'll have a long position. They'll look at the decay cost, and then they're looking at typically short vol positions that provide income that offsets that decay factor. And the key factor with that is that you have to make those limited risks. You basically have to, use an optionality sort of thing to say, well, I'm I'm short this product, but I've put another option, so I limit my losses if the vol spike happens, and then I make it up big time on the long side. So that's the only way I've seen where you get close to a flat position normally, is if you're offsetting the long side decay with short-term income, and then limit the range on the short term so that when the vol happens that you can end up being profitable.
What's your take on the price action in VIX here lately? It seems to me like, even though a few of the indexes led by Russell and NASDAQ made new highs, that the VIX, if you can see my chart here, and it kind of, even though it was a lot of complacency in here, it was from a higher level of the complacency here, and looks to be coming out of here. My teammate Steve pointed out some of the divergences we were getting, but do you think that every vol spike we've had, in my experience, has been something like that? August 2014, it got to 52, but I want to go out here. But, we've never seen a sustained period, even if you go back to, except for 07, where, you had a little bit, there was a trend, although most of it happened in 2 months.
And actually, a lot of it happened before the equities did their final blow off, which is, the really ugly part of that was in early 2009. But the VIX spike was decaying during that period, even though the equities were in their final capitulation phase.
Yeah, and isn't that what was happening in February too of this year? The market was making new highs, but the VIX was already turning. So when you see markets making new highs with volatility not eroding or going lower, is that a market tell to you?
Well, I think that first of all I view the volatility indexes as being another look at the market. I don't view it as particularly predictive, but I think it gives you a mood. It certainly gives you a mood of a different part of the market. And in the case of February, the VIX had climbed up a little bit, but the indicator that I watch the most is the term structure of both the VIX and the VIX futures. Oh,
so you look for backwardation or a carrying?
I look for. Well, it's actually normally if things are going a bull market or sideways, they're in contango. So the further out you go in volatility, the higher the price. And so one of the things I look at is when the VIX, which is 30 days, starts creeping up relative to the 90-day, which is VIX 3M. And that indicator gave a very good tell in February. It doesn't always work great, but it gave, that normally if things are quiet, that ratio will be in the 0.8 to 0.9 range. And right before, in February 2nd, it was above 1. And so you asked earlier, how do I manage this? And so basically I had two strategies going at that point with assets into each of those. One of those was completely out as of February 2nd because of this term structure indication. Okay. So that's one way to protect yourself. And frankly, I was shocked given how red that indicator was flashing that more professionals weren't out. The other strategy that I use is on the inverse side, which I haven't talked about, which is kind of a different beast because it's more of an income producer. But
you're like an option rider.
Right, exactly. But you have to have a strategy for limiting. When the steamroller comes along, you need to figure out how can you survive that.
Yeah, a lot of people blew up doing that.
Oh, yeah.
And in fact, that instrument blew up.
The XIV did. SVXY survived, but XIV blew up. Yeah. And
why did it blow up?
Well, actually, Credit Suisse made a decision to terminate it, but it was essentially a liquidity. It was a liquidity crisis in the VIX futures. Things were actually, I think, XIV and SVXY were down. They were like down 20 or 30%, but kind of in line with the overall market action. It was, markets were down 5%, the S&P, so that was a big move. But what happened is that both the 2x long and the -1 leverage, they have to do a rebalancing process at the end of every day, and that actually, at that point, was happening right when the VIX futures settled, which is about 4:15 Eastern time. And so what happened, there was so many assets allocated to this and such a huge move, is in a 30-minute or more like a 10-minute period, both the long and the short funds had to go in and buy billions of dollars worth of VIX futures. And the other side just wasn't there.
Yeah. So are you positioning yourself for a long vol play here, maybe into the summer, into the fall? Or do you think that what's happening this week is just another head fake for lower volatility to come?
My posturing is that this is a head fake, is that my sense is the macroeconomics are still reasonably positive, and there's a lot of noise with the trade war sort of activity, but if you look at most of the general market macro sort of things, the landscape feels pretty positive to me.
Okay.
But having said that, one of the things I do is if I have a inverse position or short position, is I also protect that position with out of the money puts.
Okay, so you trade the VIX options too.
Actually, in this case, I use the SVXY options, but you can also use and the situation there is you basically have to say, how much am I willing to take in a maximum drawdown? Because if you're trying to limit yourself to a 5% loss, it's very expensive to do that. But if you go into the 20% range, then they start getting to be pretty reasonable.
Because the VIX options are very, very liquid, a huge open interest.
You
ever use that?
Yeah, oh yeah, yeah. I think the main caveat I would give there is the spreads are wide, so I think it's important to do limit orders.
Like a nickel. A nickel on?
Oh no, they can be a lot wider than that. It depends. So there, and I think I'm just shocked by how many people think they have to put in their order at the bid or the offer. So
you tell people to split it, put it in the
yes,
middle?
Absolutely, yeah, or maybe give a little bit to the market maker, but start there, because otherwise you're just giving them free money.
Okay, so is this your complete focus, and this is what you're either short or long vol with different strategies? And I went to your blog. Do you offer any type of advisory service, or do you teach people how to do this? What's your business model, Vance?
So the reason I started my blog was kind of a journaling, and I think just the discipline of writing this out was good for me. So I think that one of my goals is these are complex products, and there's a lot of misunderstanding there. So one of the things that I do is just try to go into the space between the academic stuff, which is pretty inaccessible, and the tutorial stuff, which is oftentimes not deep enough. So my target audience are people that really want to understand how this stuff works and kind of flesh out the volatility space, which is quite complicated. You're talking 5 levels of derivatives. So by the time you really get down to options on an inverse that's based on VIX futures, which is based on the VIX, which is based on SPX options. So, you know, you go through a pretty long string, and a lot of people understandably don't it is not obvious.
Yeah, it's like the Rubik's Cube of instruments. You could use that.
Yeah.
So, Vance, best way for people to stay in touch with you and follow you would be, besides your Twitter handle, which I'll give out now, is the number 6_figure_invest. Any other place for people to find you besides Twitter?
No, I think that's the best vehicle for that. You know, clearly my blog is there, and leaving comments on sixfigureinvesting.com is you know, I also respond to that, or email. My email is on listed on the blog. So
okay. Well, I appreciate you taking time out of the day and sharing your views and educating us and warning our listeners about some of the landmines that you can step on, and definitely do your homework and due diligence before you just jump in. Don't do it blind on someone's recommendation. So if you want to learn about VIX, Vance is the guy. So thank you again, Vance. Great to meet you, and good luck with your strategies. Have a great summer trading season.
All right, thanks a lot, Dale.
All right, that's Vance Harwood, everybody, and that's a wrap for us today. So VIX trading 1840. We'll see if Vance is right. With my outlook on NASDAQ, I would expect higher prices, but I've been wrong before. I don't know, and I was wrong. Before I say goodbye to everyone, this is your trading session therapy. Okay, it's going to be cathartic. Everyone say it. I don't know. Okay, everyone, say it. I don't know. Print it. You'll feel better. Then take a deep breath. Now say, I was wrong. Inhale, deep breath. I was wrong. Now both of them together. I don't know, and I was wrong. Don't you feel that burden just lifting? Good one, Zia. Oh, it sounds like I'm talking to my wife. Very good, Zia. Thank you for the laugh. Okay, humor is tonic to the soul. So everyone, have a great Thursday. We'll wrap it up tomorrow. Remember, the sand in the hourglass, like the days of our lives, are running out for you to lock in prices at ForexAnalytix. I don't know, and I was wrong, not for the first time either. There you go, Ed. And then you follow it up with next. Don't dwell, okay? We did it. We said it. Next. There you go. So see you for the next session tomorrow. TGIF. Don't just count your pips, count your blessings. Everybody, no fetal positions allowed for face warriors, or you'll be drummed out of the tribe. So don't just count your pips, count your blessings. See everyone tomorrow. Thank you, investing.com, for live streaming our event today. See you, Martin. Adios, Ed. Thanks again, Vance.